Inside 2024, new income tax rates. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial, and welcome to another episode of Ad Dim Talks. So on this podcast, I am going to review the new 2024 federal income tax brackets. I'm going to compare them with 23, and we're going to chat about them. Some observations, some thoughts, potential tax planning, kind of give you my overall observations. These are important, right? This is what we pay tax on. These are the tax brackets that determine how much tax we have to pay. So the tax brackets have generally stayed the same, meaning it still ranges from 10, 12%, 22%, 24%, 32%, 35%, and 37%. So they didn't change the tax rates, but they did change the brackets in terms of the income you need to earn within the tax rate in order to determine what tax rate applies. So I'm going to compare and contrast 23 to 24, kind of go through some thoughts as well, and kind of take it from there. I think it's important. Obviously, with inflation, there have been some changes, and what I'm going to do, I'm going to pull up on the screen. So if you are watching this, you can, you should, I mean, if you're listening to this, that's great. But if you want to, you can watch this on YouTube and kind of see the numbers for yourself. So let's start at the 10% rate. In 2023, it was 11,000, up to 11,000. In 24, it's 11,600 for singles. I'm going to actually just focus on married filed jointly, which is what I guess the majority of us kind of deal with. So the interesting thing is that for 24, it's now 23,200. So 0 to 23,200 is a 10% bracket. It was 22,000 last year. The 12% bracket, 22,000 to 89,450 in 23. It's now 23,200 to 94,300. So they're expanding the brackets. That's due to inflation, which is good, right? You want to be able to stay in the lower tax rate for as long as you can. The 22 tax bracket, so it goes from 10, 12, and then it jumps big from 12 to 22, which is the biggest jump other than the 24 to 32. So if you look at 12 to 22, in 2023, it was 89,450 to 190,750, which is a big number, captures a lot. And then in 24, that 22% rate goes from 94,300 to 201,050. So again, it's expanded over almost $11,000 at the top rate, and it's up about 5,000 or so on the bottom end of it. So what that means again is if you can stay in that 22% bracket without going up, now you have a wider income to do that in. 24% rate, which is not a big increase. It's 23 was from 190 to 750 to 364,200. In 2024, it's 201,050 to 383,900. It's almost $20,000 jump at the high end. Okay, at the low end, it goes from 190 to 201. Right, so it's again a little bit $11,000 increase. And again, the idea is a lot of the high income folks want to stay between 22 and 24%. Why? Because then it goes to 32%. Right, that's the second biggest jump in tax rates between 12 and 22. It goes from 24 to 32, and it's really remarkable because most Americans don't know how the tax rates work. I get this question all along. Hey, like, how does it work if I do a Roth conversion? What tax rate am I under? And I'm just like, hey, it's amazing. People don't know what tax rate they pay. It's incredible. You should. And that's why I'm doing this podcast. It's important to understand the taxes you're going to pay. And now that the buckets have expanded, it's even better. So the 32% rate in 2023 was 364,200 to 462,500. It's now in 2024, 383,900. Okay, so up almost 20,000 to 487,450, which is up almost 25,000. Right. So the idea is you're staying in that bucket longer. But again, the whole goal is you want to stay between obviously 0 and 24%, right? If you can. Now the 24% max is 383,900 for married filed jointly and ordinary income, which used to be 364. Okay, so you have another 20,000 or so dollars, which is great. And then it goes up 35 from 32 to 35, which was 462,500 to 693,750. And in 24, it's now 487,450 to 731,200. So almost 40,000 higher on the top end, and the bottom end are 25K. And then 37% last year was 693,750. It's now 731. Okay. So again, the jumps are pretty small, 32 to 35, 35 to 37. The big jumps are the 12 to 22 and the 24 to 32. That's where you kind of want to try to position yourself. So bringing all this into the IRA context, why does it matter? Well, deductions matter, right? The more income you can deduct, obviously the lower your tax rate will be. Why? Because deductions reduce your tax rate, right? If you made $100,000, you have $20,000 of 401k deductions, pay tax on 80. The whole idea is reduce your tax rate by reducing the amount of adjusted gross income. Same with conversions, right? Now, let me go back to my, I just stopped screen sharing and let me go back to it. So let's say now that and again, if you're watching this, you probably know what I'm talking about. If you're listening on a podcast, I would suggest going on YouTube. You can just go to IRA Financial channel and you can watch this podcast on our YouTube channel and you can kind of see the tax brackets. It may make it a little bit more enjoyable or easy to understand. But let's say you're at the 22 tax bracket, okay? Last year you made between 89 and 190. Now you can make between 94 and 201. So that means, let's say last year you made 170, okay? Now this year you're gonna make 175. You can do another $20,000 of conversions without increasing your tax bracket, right? Without going from 22 to 24. Well, let's say you were in the 24 tax bracket last year. You made, 300K, and now you're going to make 310 this year. You can go up to 383,900 in terms of doing more conversions without going up from 24 to 32%. Yeah, conversions are still subject to 24% tax in that example, but it's not going to push you to a higher tax bracket. So that I think is a very interesting tax planning opportunity is say, hey, I'm going to do conversions over many years. Why do you want to do a conversion? Well, once you do a Roth conversion, so long as you're over 59 and a half, the Roth's been open 5 years, it's all tax-free, right? So if you can do conversions over 3, 4, 5 years, you'll start these 5-year windows each time, but idea is to minimize the amount of tax you pay. So you want to stay in your own tax rate. You want to, obviously, if you have deductions or losses, even better. If you can get a discounted valuation on what you're converting, cash obviously you can't, but if you're converting real estate or a private interest in a company or hedge fund or private equity interest, or maybe even real estate interest, maybe in cryptos, you could potentially get a discounted valuation between 25 and 50%, which will again reduce the amount of the conversion. And the idea is keep your income in the same tax bracket. You don't want to move up. You don't want to go from 12 to 22% or from 24 to 32% to do a conversion. That doesn't make sense. 8% is a lot of money. Maybe you don't care as much going 35 to 37, but those two buckets, the 12 to 22 and the 24 to 32, a lot of arbitrage there. And that's where you can work on keeping your numbers in that lower bracket so you don't have to pay the augmented tax. So that's kind of what I want to share for you. I think the income tax brackets, like we all should know where we are or what we're paying. Like that should just be given. You should know what tax rate you are. And then when you're thinking about doing Roth conversions, you should also consider your tax bracket, what that means. Obviously, if you have losses or if you can get a discount, that will help as well. Same with just making 401k contributions or charity or other deductions. Like you want to see how that will help you when it comes to your tax rate. So maybe a $20,000 deduction is great, but if you can get maybe an additional tax deduction, whether it's through an increased 401k contribution or additional charity, and go back down to 12% instead of 24, like that's pretty good. So it's again important to understand tax brackets because it definitely could impact tax planning, the ability to get deductions, as well as if you want to do a conversion or not, or how much you want to take as a distribution. Tax rates matter, and it's just shocking that most of my colleagues have no idea what tax rate they pay. Like, oh, I don't know, my accountant deals with that. I'm like, you should know. It's probably the most important rate of number you are going to need to understand, because it's going to impact you the greatest financially. So we all should know what rates we're paying. We all should know how they change from year to year, because that's going to impact how we save for retirement, how we generate deductions, whether it's charity or the like, and then what we can do in terms of income distributions, or conversion. So there you go. Hope you guys enjoyed today's Adam Talks. Again, I suggest you watch this on YouTube if you can. My voice, is what it is. It's not the greatest. My kids don't listen to it, so hopefully you guys are listening. But I think it's easier to kind of see the tax brackets on the screen. I think you'll get a little bit more out of this podcast / video. So thanks again. Have a great day. Appreciate all the support, and I'll see everyone next week. Take care.